You're gonna start the recording. Okay, nice to meet you, everyone. My name is Paula Minakov, and together with Natalia, we're the founders of Creations Atelier, a directory and membership for artists. We're building a community which will support artists, already does, I believe, in their professional development, as well as with exhibition opportunities. And Natalia and I, we're both artists as well, so we'll be developing our careers and exhibiting alongside you. And we also offer monthly workshops like this one with experts. And when we were wondering what to do about December, taxes came up just because we all have to do our taxes and because Creations Atelier is new, so Natalia and I are also looking into accountants and taxes and things like that. And then we thought we're going to make this workshop free because it's before Christmas and because we have just a little bit over a month until we have to submit our taxes for the last year. And then we asked Phyu if she would run the workshop for us. And she's a great accountant as well as a social entrepreneur. She runs a company called Mogok Tea, with which she supports the local community in Myanmar. I don't know if I'm pronouncing it correctly, but yeah. So Phyu will guide us with our taxes for sole traders, artists, and small businesses, and how to optimize our taxes and how to submit our tax return and how to keep track of our taxes during the year so that it is not such a pain like 3 days before the end of January. So yeah, there you go, Phyu. You can begin.
Thank you very much. I am going to screen share. Thank you for everyone joining today, and thank you, Natalia and Paula, for inviting me to run this workshop. My name is Phyu Thwe. I'm a charter certified accountant. I've been in accountancy for 17 years. I'm trained in a small practice where we specialize in small startup business, including self-employed partnership, limited company, payroll, VAT, any accountancy related really for small businesses until they reach their audit threshold at 10.2 million turnover. So with that, I would like to give you a little tips on how to maximize your take-home pay, really. So this, when we talk about personal tax, this is all about understanding UK personal taxation and how income tax and what allowances do we have, what deduction can we make from our income before we start paying tax. Those are the things I will be going through today with you. And who is the tax return for? But a lot of us will feel actually tax return is for those who are self-employed or under limited company. It's actually not correct, because tax return cover for every individual, every one of us. Even if you are paying tax through your payroll, and you might be required to submit your tax return. So I will go through who will be required to submit your personal tax return. So personal tax return include all the UK limited company directors are required to submit personal tax return. If you register for self-assessment or self-employed, and you need to submit your personal tax return. And if you receive partnership income and landlord, those receive rental income, those are required to submit the tax return. And also, previously income over 100,000, if you're under PAYE income, if you're receiving income through payroll, and when your income go over 100,000, you need to submit your tax return, mainly because as soon as your total income gone over 100,000, and you start to lose personal allowance. So every £2 you earn over 100,000, you lose £1 of personal allowance. Therefore, you are required to submit the tax return. That has been changed the threshold has been changed to 150,000 from 2023-24 tax year. Those are the one that HMRC have on their system. But of course, what HMRC don't have is, and those who are receiving investment income, interest income. So prior to 2017, when we received the bank interest from the bank, we received ATP instead of £1. So bank deducted 20% of the interest income and pass it on to HMRC before they releasing the interest back to us. But since then, bank has been giving us the gross interest. Therefore, the interest that we are receiving, apart from ISAs, has not been taxed. That I am not sure if everybody is aware of that. So if you are receiving interest income and if you're on higher rate tax, even though you've been paying tax under PAYE, you still need to submit the tax return. And also when you have any gains on investment and any sales of shares or assets, any dividend incomes, those you have to report to HMRC. So hence, there is a personal tax return. In other words, it's called self-assessment. The reason why it is called self-assessment is we have to self-assess whether we need to submit our income tax, even though majority of our income has been taxed at source. So it's very important to be aware and check to make sure that you check whether you need to submit your tax. And before we start paying income tax, submitting income tax is a declaration where we are declaring income tax to declare what portion of our income will be taxable. So before we are taxed, we receive allowances such as personal allowance. And before we are taxed, 12,570 is tax-free for every individual. And then we start to lose every £1 for £2 over 100K. So by the time we receive 125K income, you lose your personal allowance entirely. And there are ways to not to lose that personal allowance, which I will come on to later. And also, pension contribution is another way of tax relief where we can get a tax reduction, which I will come into detail in a separate session on a later stage. And charitable donation, if you make any charitable donation within your during the tax year, you can get deduction on your income tax. And of course, under self-employment, and your business-related costs, such as travel, any business-related expenses can be deducted before you pay any income tax. And with rental income, though, you will only be able to claim repair and maintenance and renewal. So for example, if you are replacing entirely new model, for example, if you have a fridge, the old fridge for £500, and you are now renewing high tech on top of the range, £3,000 worth of fridge and freezer, and you can only be able to claim £500 instead of our entire 3,000, because HMRC only allow for like only. And then marriage allowance, where if one of the partner, if husband or wife has been stay at home mom for entire tax year, then part of the personal allowance can be transferred to husband, or vice versa, to save income tax up to £252 each year. And saving and investment relief, interest up to £1,000 is tax-free. However, if you are on higher rate tax, then you will only receive £500 nil rate, and the other £500 will be taxed at either basic rate or higher rate, depending on your other income. I will show you a detailed explanation of how it is calculated with the comparison of calculation in the next slide, in the following slides. So feel free to ask me any question you have at this stage. And I'm going on to the expense section, where these are the main asked question of entrepreneur, where they know that this is where their income tax will be much affected. So on expenses, so to give you a brief if I could show another slide share. So on self-employment, on self-employed sole trader, our income tax year starts from the 6th of April to the 5th of April, or you can change it to the period from the 1st of April to 31st of March. It's entirely up to you. That is the new reform, where you either go by 6th April or the 1st of April. In the past, you can have any accounting year for your business, but it has been changed to from 1st of April or the 6th of April as per tax period. And your income will be taxed. You will only be taxed on the profit of your self-employed income. Therefore, the income are the invoice that you issue, or the income generated through invoicing to your client, or sale of your arts, or any of the other services. And then expenses is deductible. And this is where I am going to explain which are the allowable expenses. So on the expense section, all your direct expenses, such as expenses directly attributable to the business. So for example, for artists, you will have all the material that you would have bought to create your artwork. And those are all direct expense and deductible for business purpose. And anything business related travel, for example, if you are if you are driving your own car to your clients or to go to exhibition or to meet with potential clients, those are all business travel. And you can claim mileage up to 45p per mile for the first 10,000 miles and 25p per mile for anything after that in each tax year. And if you are on motorbike, then you can claim 24p per mile. And if you are on cycling, it will be 20p per mile. In addition, you can claim parking, toll, congestion charge, any taxi, and of course, with Oyster card and any top-up journey, you have to keep a record of all the detail of the journey to be able to claim. So, however, any travel to a normal place of work. So if you have a specific studio that you travel to and home, that will not be counted as business journey. And subsistent, if you are away from home, meeting clients and all sorts, those can be claimed as subsistent. Away from home for overnight stay, accommodation can also be claimed. And use of home as office. Many of us start working from home since COVID. So of course you can claim use of home as office. But in this case, if you work from home, if you don't have any working or any evidence to prove, you can claim £6 per week flat rate for 52 weeks without having to prove any evidence to HMRC. But if you want to claim the actual usage, you have to have evidence of all the utility bills and everything and how your calculation arrived. But I can provide you with the working how it can be worked out. But when you are claiming use of home as office, most people start claiming one dedicated room for use of home as office, and be careful around there, because when you sell your residential property, you might not be qualified for principal property relief, because to eligible for principal property relief of 100% on your gains, it's only available when you use your home solely for residential purpose, not for business. So that is something to be careful of. Any computer software, hardware, consumable, website, domain, those can also be claimed as business expenses. Journal publication, membership fees. So anything like any professional development where you have to keep up to date or to keep up with the publication, those can also be claimed. Any stationery, printing, postage, telephone, internet, insurance, bank fees, any training courses. So these are all the general expenses you can claim. And of course, certain businesses that wholly and exclusively require for you to purchase certain equipment for your business, those can also be claimed as your business expenses. So in any case, please mindful and be careful to keep all the receipt in case HMRC queries. And pension is another one that very important for to look out for. And I don't know if any of you have private pension in place already. Who in here has private pension in place?
From previous work, yes. Currently, not. But I'm thinking to do it.
Yeah. So I in here you will all find quite important how important private pension is in reducing your income tax, especially if you are on higher rate tax. So I will show you with the calculation, but for now I will give you an overview of why pension is important. Because a lot of us, when we look into preparing our tax return or going to an accountant, majority of the time or most of the time, when I am asked is, what I'm asked is, what can I claim? But or can I buy this to reduce my tax? But we don't encourage individual to go and spend just to save tax, because when they are spending, it's actually funds are going out of their pocket anyway. So we want them to not spend, but invest in something that will save tax, but work towards their future retirement. That is where our favorite product come in, which is the private pension. So how private pension work is, sorry, excuse me. How private pension work is, as a self-employed individual, not just self-employed, people who are on payroll, every individual, we are eligible to contribute into private pension, into any pension provider that we trust and will perform well. So how private pension work is, for basic rate taxpayer, they will get 20% tax relief. And for higher rate taxpayer, they will get 40% tax relief. And additional taxpayer, they will get up to 45% tax relief, which I will show you in figures in detail in the next tax calculation slide. When we carry out this, when you contribute into pension, you are parting with your funds for until you reach the retirement age. What I mean by retirement age is much shorter than your traditional 67 of the government retirement age. We can previously at 55 and now at 57, you can retire early as 57 to receive this private pension payout. So how the government tax relief on pension work is, when you contribute 80 pounds into your pension, private pension contribution, government top up 20 pounds. So overall, 100 pounds go into your pot. That is if you are on basic rate taxpayer. In other words, for you to receive 100 pounds, you only need to invest 80 pounds. But if you are a higher rate taxpayer, you contribute 80 pounds, but in your pot, you get 100 pounds in your pot. But on top of that, when we submit your tax return, you can claim 20 pounds extra within your tax, which I will show you how it can be done. And by that, it only costs you 60 pounds to receive 100 pounds into your pension pot. And additionally, for additional taxpayer, they are getting 25%. Therefore, it costs them 55 pounds to receive 100 pounds in their pension pot. So how to get the relief is through the self-assessment. to submit the self-assessment, the tax return that we are submitting. So since we are submitting the tax return, why not take advantage of this? So the annual allowance in each tax year, we are eligible to, we can contribute up to 60,000 per year, and you cannot exceed 60,000 pounds. However, if you didn't use 60,000 in the last 3 tax year, you can contribute, you can use this unused limit in this tax year. It can be carried forward to the next 3 years. So to give you an example, I'll show you my tax calculation of how this tax can be saved. So bear with me 1 minute. I am going to open my tax calculation. Yeah, sorry. So in this example of tax calculation, John Doe has a self-employment profit of 43,000, profit from land and property of 20,000, and interest income of 1,000. And his total income for the tax year is 65, and of which personal allowance is deducted. So he's paying tax at 20%, 40%. And then, of course, when he's reached higher rate threshold, his interest income, only £500 become tax-free, and the other 500 at tax at 40%. And then, of course, he received finance costs, 20% on his mortgage interest relief. And then he will pay class 4 NI and class 2 NI. So his overall income is overall tax is £14,000 for this tax year. That is before John Doe did any contribute into any pension. So I'm going to compare with another tax return with a pension contribution here. And in this case, he has the same income, the same everything, but he decided to contribute £8,000 into private pension this year, this tax year. Of course, he can contribute up to 60,000, or he may decide to contribute 25,000, in which case the entire 65,000 will be taxed at 20% instead of part of that at 40%. But in this case here, 10,000 of that has been pushed at 20%. So he's only paying part of it on higher rate tax. And his income tax has now reduced by £2,000 here. Just because he contributes into pension, his basic rate tax ban is extended by £10,000.
Sorry, can I ask you, can you put the two together so I can see it? Because for me, yeah, if it's possible. If not, yeah, because yeah, I need to see it. Sorry.
I am going to figure out how to compare.
You can share the screen instead of the page. So if you open both, you can pay. Because to me, I didn't get it. Or we go through again, because in other case, I don't know, maybe it's just me. Yeah, thanks.
No, I'll open both. I'll put both next to each other. Ouch, sorry. Okay, I have to share my share screen, entire screen. Yeah, is it better? Can you see?
Yes, thanks. Because in other case, yeah, I couldn't remember the figures. Sorry. Yeah.
If I squeeze it a little bit, this. Can you see here? I think, yeah, here.
Yeah, thanks.
So basically, can I just say, in a nutshell, just from contributing into a pension, he's saved £2,000 over the year.
No, actually 4,000 because
4,000.
Yes. So the actual contribution that he made is only 8,000.
Yes.
Yeah, but in his pot, it's 10,000 went into his pot because government put 2,000. And then on his tax bill, he got another reduction of 2,000. So overall, 40,000 because he's on higher rate tax. But if somebody is on basic rate tax, they don't get any deduction because they are paying everything on 20% only here.
But are you saying though that it is still valuable? It's still worthwhile.
It is definitely
opening up a pension. It will benefit you whether you're on higher rate tax
or lower rate. Yes.
Okay, thank you.
If by doing this you are gaining 2,000 tax rebate from government, but by doing nothing you are not gaining anything in that particular tax year.
And then does that mean that, I don't know, when I turn 57 or whatever, I can withdraw that with a lower tax rate anyway, or how does it work?
So by the time you retire, then that will be depending on any other income you receive. So currently, if you are taking but by the time you retire, based on current regulation, when you retire currently at 57, let's say you are 57 this year, you are taking out your pension, you have a choice to take out either 25% lump sum or you take out overall throughout your retirement age on a monthly basis. However, it was taken out. The retirement lump sum is tax-free, and then anything you are paid every month, you'll be taxed as normal.
So the more I put into my pension, the more I can get tax-free because it's a percentage of the whole pot.
Yes.
Okay, interesting.
But the whole point of pension is not about tax-free. The whole point of pension is to save your current, to benefit from current, to reduce the current income tax by working towards your retirement planning. So the next slide, I will show you national insurance and how it affected your retirement and where you are with your financial journey. So you know, and you will be well aware of how far you are with your retirement or how comfortable you will be when you retire.
And you help with this as well?
Yes, yes, yes. So I will stop share here, and then I will carry on with my presentation. And then after that, stop me anytime if you want to. I'll to give you.
What I wanted to ask, and I don't know whether it's appropriate at this stage, is you know, the national insurance classes.
Yeah,
There's class 4 and class 2. And
I'm
we're going to
coming.
that. Brilliant. Thank you.
I'm coming to that. Yes.
Okay, thank you very much. Thank you. Thank you.
So here, payment and deadline, and these are the tax filing. Everybody is well aware that 31st January is the filing deadline and payment deadline. And then payment on account is due. Is there any first timer, whoever filing first time for their tax return in this group?
Yes, me.
Okay. In that case, then I'll give you a little bit more information of first timer tax. How it works is when your tax bill comes to over £1,000 in the first year, you will have to make payment on account. I don't know if you are aware of that. What is payment on account is because the way it works is we are here. This is our tax year. Start from the 5th April, 6th April to the 5th of April. 6th April to the 5th of April. We are filing 2024 tax return in end of 2025. We are filing our tax here 9 months into the next tax year. So by the time you pay this tax, on 31st of January, you are already crossing 9 months into next tax year. So what HMRC assume, unless you tell them otherwise, is your income for next tax year is similar or more than this year. Therefore, they want you to make 50% of the tax bill in advance from now for next year. So, in other words, your tax bill for, to give you an example, 2023-24, due on 31st January 2025 is £1,000, for example. And by the time you pay in 31st of January, you have to make 50% of that tax bill, which is £500 in advance for tax year 2024-25, current tax year. So in 31st January, you will be paying 1,500 instead of 1,000. And then on 31st of July, you pay another 500. So by July 2025, you already paid 1,000 in advance for next tax year. So if you are filing first time, that is how it will work. So every year you will be in advance. And let's say next year your tax bill comes to 1,200. You only need to pay 200, the balance, plus 600 pounds, half of the 1,200 in advance for the following tax year. So by contributing to pension, reducing your income tax, it helps with the cash flow as well, because you will not be paying more in advance for future tax bill. So that is for first timer tax, whoever filing for first time. If you want to know more, ask me, that's okay later. And national insurance. National insurance is very important because it's our state pension is a key part of national insurance contribution. Currently, the state pension in 2024-25, and government is paying out £221.20 per week. So to be eligible for state pension, you have to be contributing into national insurance minimum of 10 years. And to gain the full state pension payment, you should be contributing 35 full years in your lifetime. So let's say if you have 20 years of contribution, then all you will get is a portion of the eligible amount, supposed to somebody who contributed 35 years getting a full contribution. For self-employed individual, you will be contributing two types of national insurance, class 2 and class 4. Class 2 is flat rate, £3.45 per week for whenever your income go above 6,725 in current tax year. So that is flat rate. For class 4 and 9, it's 9% above the personal allowance limit, up to 50,270. Anything above is extra 2% upper limit. But this is where we have to be very careful, because some of you might have been under employment in the past, and some of you might have been self-employed throughout your life. Please log into your HMRC government gateway account to check what is your state pension eligibility is. In there, in your login page, it will tell you whether you have a national insurance gap. If you do, try and fill that gap. If you have only been receiving rental income throughout and not receive any self-employed income nor payroll income in the past, you will not be contributing to class 2, class 4, or class 1. And therefore, you will have a national insurance gap that will affect your national insurance, that will affect your state pension payout when you retire. But you can fill that gap by contribution into class 3 voluntary contribution, which is £17.45 per week. You will be able to find out whether you have a gap in your government gateway login. If you haven't got set up government gateway, you can set up.
Where in that? I've never seen that before when submitting a tax return. Where can I see it in the website?
When you log into your government gateway with HMRC, and you can go into national insurance contribution, and in there it will tell you sorry, it will tell you how many years you have contributed in your working life and how many years of gap you have.
Right. So, and I need to have throughout my career 35 years, did you say?
Yes, until you retire. Yes.
All right.
Yes. So if you have started working from age 20, for example, you should have 20 years of contribution to date.
What about the people that, like myself and perhaps some of the other people on the on the call who moved here from abroad?
In which case, then you would have maybe 10 years, less than 10 years, then you will have to continue contributing. But depending on at which age you move into UK, you will be contributing 35 or more. But if you move into UK much later in life, then you will not have a full 35 years.
Okay, and that needs to be 35 years of both the class 2 and class 4?
No. So
whatever class 3 needs.
You will be
voluntary one.
eligible. You will be eligible from year 10 onwards. So 35 year is to get the full amount.
And if you only have contributed like whatever one of the classes,
you will
part
still
of
be
those
qualified.
years,
You will still be qualified.
so
you don't need to contribute every class. You only need to contribute. You only need to contribute into one class. Like, to give you an example, we have got a limited company director who has been paid through limited company, but not at a national insurance threshold. So for them, there is no actual physical contribution towards the payment, towards the NI, but they an eligible amount through the payroll. Therefore, they still be eligible.
So it doesn't matter how you paid, so long as you paid, whether it's for your job, through your self-employment, voluntarily or whatever.
Yes.
And for the mothers among us, I remember I wasn't paying that when I was receiving my maternity payments. I was receiving some monthly support or whatever it was. I can't remember anymore.
If you are on
but there was a gap in which I wasn't paying that.
If you have any gap, you can check what is the gap, and you can fill that gap by contributing to voluntary. And HMRC already worked that out for you. So when you go into your login, and then they will say you have, let's say you have a gap for 2023-24, and then they said for that gap, you need to contribute £870 by the deadline. Yes.
Okay.
So you should be you should be able to find out from that login thing.
So women who are receiving maternity support, they still have to contribute national insurance, because I thought I didn't have to contribute during that time.
No. If you during the maternity period, whether it's 9 months or 10 months, that is automatically qualified. That period automatically qualified because you are in receipt of a maternity allowance.
Okay.
That period is automatic, that you don't need to contribute.
All right. Okay, thank you. I understand.
So government has announced the Making Tax Digital. So some of you may be affected by it. From April 2026, if you have qualifying income over 50,000, qualifying income include rental income, self-employed income, you have to register for Making Tax Digital and start submitting your tax return quarterly as opposed to annually. And from April 2027, the qualifying income where the threshold is reduced to 30,000. That means it's virtually everybody has to submit the Making Tax Digital. And that is...
So this Making Tax Digital basically means we need to be doing self-assessment all the time? Or cool.
Yes, quarterly.
Fantastic.
So
yeah, that makes me happy. I can see all warm inside. Okay.
Yes. So this is the gist of the income tax. But of course, I explain mostly on pension, and pension is the one that we should be maximizing before we explore other options. The reason being is the way we work is when we know how much the government pension that we will receive, and then by contributing to private pension, we know how much of the pension contribution, pension payout from private pension we will receive. We can determine what our retirement will look like, how much we will receive monthly by the time we retire. So we can kind of plan ahead our lifestyle ahead of the retirement. Therefore, even though retirement is still another 20, 30 years away, we are working towards it. And with that timeline in front of us, we are more flexible with how much or what amount we can contribute to achieve our aim and our goals. And once you have exhausted or used all the pension allowance, then of course there are other options such as investment, government incentivized investment scheme, where if you contribute into EIS or SCIS share, you get a straight rebate into your tax bill. And those are some of the options that we can explore.
I remember that there was an option if you do have a limited company that you could invest in property in the name of the company. That would count as an expense, but then there was, somebody told me at one point and I didn't quite understand it. Do you know anything about that?
So can you ask the question again?
So to reduce corporate taxes, if you have a limited company, you could invest in property, and that somehow works with the pension, perhaps, or I really can't quite remember what it was, but there was something about investing in property instead of paying corporate tax. I believe it was for limited companies only.
It's similarly. I'll share my screen to give you a little overview. So how it works is under limited company, I am going to show here. Under limited company, we have income here, company income, company expense, and then company profit. And then here is profit. And company will pay tax on that. Currently, it 19% up to 50,000 and up to 50,000 profit, and anything above is 25%. tax rate. But if we had contribute into director pension in between here, that increases the expense. Therefore, this profit reduce. If you contribute into pension here, and then that way you get a corporation tax reduct at 25%. That is immediate way of reducing if you have a limited company. But the other way that you are told to invest in property is because in the limited company, when you invest in property, the interest that pay for mortgage, interest paid for the mortgage is deductible here, whereas in self-employment or normal rental income, you are not eligible to deduct this interest paid for. Interest paid for property is not deductible. So in other words, you pay tax on your rental, the whole of your rental income if you are under self-assessment. But in here, you get your rental income minus interest, and you pay tax on the profit that you make.
Mm-hmm.
That's why it's suggested that better to put it in the limited company.
Okay.
Because you can deduct the interest paid.
All right.
So, yeah. Is there any questions? Anybody has any question?
No, thanks. For me, it was really good. Thank you so much. I don't know, maybe someone else.
For me, it's all about how to set out my expenses. And in terms of a spreadsheet, how do I set out because I used to be self-employed many decades ago, so I've really forgotten how you kind of set out, obviously month by month, my expenses, obviously my income. I know what my income is. I can easily track that, but I'm struggling with the expenses and how I set it out on my spreadsheet. If you've got any advice on that or any templates.
I have template that I can share with you. I will share with Paula. She can distribute it.
That'd be amazing. Thank you.
But the best way to do it, or the cleanest way to have all the expenses and income separated is to have a separate bank account. So I advise all my clients to have a separate clean bank account where you use that account religiously for business. So, for example, where you will have a money coming in from client, go direct into that account. And then anytime you go out, even if you are taking Uber or anything business related, set it, Microsoft, everything, all your direct debit to do with expenses, set it to that account.
Yeah.
Every outgoing is from there. And of course, at the end of the month, you'll be like, well, I need the money. You will only have 1 or 2 lines from that account transfer out to your private account to say, and to cover for personal expenses. So, and then all you will need is to download that particular bank statement in CSV format and then take away all the personal transfer to yourself. The rest will be left with in and out of business expenses.
Yeah, I hear you. For me, it's just getting to that. I have got a separate business account, but it's getting my head around, yeah, all of my income from my clients come into that account now, but it's just getting my head around all like my personal expenses, and I'm still transferring money back and forth from the business account into my personal. And yeah, I'm remembering that because yesterday I did some traveling, I should have taken the money from my business account because it was a business, it was a work travel expense, and not from my personal. So for me, it's making that transition and that shift that I'm struggling with for the moment. But I think once I do it, I keep saying to myself, once I've done it the first year, my brain will kick in and go forward. But for now, I am struggling a little bit of balancing the two accounts.
Yes, I can forward my expense template to Paula later, and
Thank you.
Yeah, I'd really appreciate that. That would really help me. Thank you.
And if we only use our business account for, say, travel, we pay on a card to get on the train or whatever, we don't get an actual receipt from that travel, like basically touch in and touch out on the tube, then what happens? That's basically calculated because it's TFL and it's just on the bank statement. Nobody really wants an actual receipt outside of that.
So you have to have a log of your business journey, because there is no evidence of this being business journey unless you have a record of this journey through your own journal or your calendar.
Okay, so if they ask me, I can say I went to, I don't know, view exhibition space, for example.
Yes. Yeah.
Okay.
Yeah, things like that, if you don't put it in business account, it kind of slipped through.
No, but if I do put it in my business account,
Mm.
so it is in my business account, this journey. I used my business card to touch in and touch out. Then I still need a record of what I was doing.
Yes.
That is a lot of work.
Yeah, unfortunately, yes. Similarly, it's similar to when we use our private car for a business journey, we have to keep a mileage log. So it's more of a habit of keeping things.
Yeah.
So how does having an accountant help with this?
So for us, we currently use software. So one of our clients has got a mileage, something called Map something, that they keep a log of all their mileage, and then they can download it at the end of the year. I think they pay like £1.59 a month for that app.
And then you can record all your expenses there, like a diary.
Yeah, but not all your expenses. To record all the expenses is separate software. So it became a little bit costly and it will become when Making Tax Digital begin.
That sounds like it will become quite complex. How long do we need to keep our tax records for? Is it 5 or 6 years?
7 years.
7 years.
Yeah.
Okay. Why? Was it ever 5 years? Why do I remember that?
Yeah, it was 5 years, but it's actually 7 years.
Is that the new thing?
No.
It was always 7 years.
Yeah.
Okay.
But even though 7, HMRC may go up to 15 years.
Okay, so if you don't have those records anymore because they say 5 or 7 years.
If you don't have the records, but for example, we have records of how we get to that figure, what we
Okay.
even that
Got
should
it.
be sufficient for a later very years.
Okay.
For the recent year, they would want to see every invoices, not every invoices, depending on, but there is a threshold they ask for. For example, they will say invoices from 250 upwards, copy of them.
Okay. So below 250, for example, like a train journey, you don't have to have an invoice or receipt.
Not necessarily, but if your expenses are much lower, the threshold become lower. So depending on your overall expenses.
Yeah. Okay.
And overall outlook of what your tax return look like. Yeah.
All right.
Yeah.
Yeah, can I ask a question regarding using your home as an office? I live in a shared ownership property, so I pay mortgage and rent.
Yes.
Can I claim any of that? What percentage could I claim for working from home?
So when you start claiming percentage, then you will lose eligibility for principal property relief when you sell your flat.
Okay. So
you will want to work out exactly how many hours you work out of, let's say 24 hours, let's say 40 hours out of 168 hours. And then the overall cost divided by 40 hours out of 168 hours. That's how you will apportion it. When I send my working expense template, how to work out use of home as office will also be included there.
Fabulous. Oh, bless you. Thank you so much. That'd be really helpful.
That's okay.
So Paola, will you send that on, please? Will you put that in
I will, yes, we will send everything that Phyu sends us.
Lovely,
All
thank you.
the templates and stuff, and we'll also put them on the website where you'll be able to download them.
Thank you very much. Thank you.
Yeah, I will send the expense template.
And will you be sharing your presentation with us as well?
Yes, I will do. I will actually send it together with all of it.
We will send it over with the record, right, Paula, all together.
Sorry, what?
We will send it everything with the recording all together.
Yeah. We will upload the recording to the website and we'll give everybody access to that. It will be public. This one is a public workshop anyway because it's free. So everybody will be able to get on it. I think the templates probably.
Okay.
I don't know. That kind of depends on Phyu if she wants to make her templates public, perhaps not.
Sorry, what do you say?
The recording of this workshop will be public on our website, but of course you don't have to make your templates public for everyone because they're yours. So you can let us know whether we can just send them to the people who attended the workshop or everyone will be able to download them. That depends on you because they're your templates.
I think we will give it to those who attend this workshop.
Okay, all right.
I think, yeah, thank you so much, everyone, to come today. And yeah, have a beautiful rest of the week. Merry Christmas and Happy New Year.
Thank you very much for this workshop. I really appreciated all the advice and information.
If you have any questions further, we'll share Ph유's details, and also we'll create a profile for her on the website where you'll be able to just send her a message because I believe you made an account. So yeah, you can just get in touch with her directly with any further questions,
Yeah.
or
And
if anybody would like to work with her in the future.
yeah, anybody have any questions or would like a free consultation, please feel free to email me.
Yeah.
And yeah, thank you very much. I hope that was helpful with the subject that's quite complex, and we all wish we didn't have to deal with, but we have to.
Yeah.
The next workshop we are planning. Well, we're planning to make a presentation where we'll talk to everybody about Creations Atelier, about our future plans, about our next exhibition, which we have already booked, and it will take place at the end of March and during April. So we are doing the first Creations Atelier exhibition at the Marylebone Parish Church. They have an art space in the crypt, so it's quite atmospheric. It's very nice. It's very central. It's a few minutes from Baker Street. It's a very imposing, beautiful building. For those of you that don't know it, it's a lovely church. And the private view will be on the 4th of April. The artists among you are welcome to apply to exhibit with us. And of course, everybody else, or if you do not want to exhibit on this occasion, you are invited to come to the private view. So during this exhibition, we'll probably organize a networking event and perhaps some other events. And then we're hoping from May to begin also regular networking events, monthly networking events face-to-face. We are in talks with some venues in central London, so we're hoping that the events will be in central London, but we can't promise just yet. Some will probably be in South London as well, because a lot of us are either live or work in South London at this point. And yeah, we'll keep you in touch, and we're hoping to be seeing you on the rest of our Zoom workshops as well as face-to-face. It's going to be an exciting year. So enjoy the holidays. Thank you.
Thank you very
Thank
much.
you.
Thank you.
very much. Really enjoyed it. Thank you.
Thank you.
Thanks a
Thank
lot.
you. Thanks again.
Bye.
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 Bye-bye.